name is Adam Greenfader. I have the pleasure and honor to be with Ian Ward of Carpenter, Senior Vice President.
Thanks, Adam. Appreciate it, and I'm glad to be here. As Adam said, my name is Ian Ward, and I work for Carpenter. We're one of the largest reinsurance brokers in the world. We have offices globally in the region. I look after clients that are based in Bahamas, Cayman, St. Martin, Jamaica, all the way down to Barbados. So it's very culturally diverse in terms of the islands that I work in, but very similar issues and very similar challenges that we face in terms of raising reinsurance capacity for the local insurance companies to run and to operate.
So, Ian, I guess just to start us off with a real simple question, what is reinsurance? I mean, I know.
Well, I think the easiest way of describing it is insurance of insurance companies.
How large in terms of dollar value or euro value are reinsurance companies? I mean, what kind of money are we talking about?
The total reinsurance capacity for all of the companies added up is somewhere in the region of 560 to 570 billion US dollars.
A lot of local insurance companies in Miami, I understand, in 2023 closed and had to leave the state. And then after Surfside, a lot of new regulation has kind of tightened up the HOAs and specifically insurance requirements. So kind of how are you seeing this relationship now in this new climatic environment we're in with insurance?
There's been a lot of talk of maybe having to have a new classification of hurricanes that incorporates a Cat 6 storm, just because we're seeing rapid intensification of storms. We're seeing much higher wind speeds. We're seeing larger storms coming through the Atlantic basin. And certainly when investors in the reinsurance industry are looking to provide capital, they're taking this into consideration and pricing for it accordingly, because at the moment there's not enough long-term data to demonstrate whether or not this is a 2 or 3 year thing or it's going to be a 20-year thing. With kind of urban development and a higher concentration of value of risk, a storm occurring today, which was exactly the same as 20 years ago, is going to cost exponentially more than it did 20 years ago, just because of the sheer concentration of risk value.
How do you see the Caribbean region kind of facing this?
What we've started to encourage our clients to do is to really sort of provide that granular level of detail and really drill down into their underwriting philosophy to actually sort of find out what type of construction has been used, whether or not they had a loss from previous storm, so that when we're presenting their data and their information to the reinsurance market, when we're looking for capacity, we can maybe differentiate our clients or differentiate portfolios to say, look, you have maybe a more of a macro view of the type of risk in a particular island, but we can actually drill down and say, look, in actual fact, this is the type of construction that typically our clients will look to insure. And as a result, we would expect their anticipated loss to be lower as a result of this. And we run through CAT models and provide them with sort of expected probable maximum losses for certain storm levels. And it's trying to educate and trying to sort of have a higher level of understanding of risk rather